The Nikkei just ripped 1,000 points higher to close last week at 69,744. Monthly trend strong buy. Weekly trend strong buy. But the most dangerous word in trading right now is overbought. While the world chases this melt-up, I'm looking at a volatility index that just collapsed 26% to a 3-month low, and a weekly stochastic that hasn't left the 90s. This week has one trapdoor and one 3 to 5 day opportunity that most traders won't see until it's too late. I'll show you both right now. On screen text, 70,217. The line that defines your week, 2 Monday scalps plus 1 swing. Stay to the end. I'm giving you 2 Monday scalps you can execute in the first 3 hours, and 1 swing trade designed to ride the core move all the way to Friday's close. This is your Nikkei 225 week ahead blueprint. My 3 to 5 day structural bias. We are trending up, but we are entering a sideways to fade zone unless buyers prove absolute dominance by Wednesday. The invalidation level that flips the entire weekly outlook bearish is a daily close below 70,217, the weekly pivot. Write that number down. If the Nikkei closes any day this week below 70,217, the monthly structure resets, and we are looking at a rapid unwind towards 67,600. But if we hold it, the melt up towards 76,000 is on the table. Here's the herd truth. Coming into this week, the weaker yen narrative is fully priced in. Every retail trader, every headline scanner is long. Positioning is stretched. Institutional flows show big money. Already has the Nikkei as a crowded long. That sets up a classic liquidity grab. When the volatility index is this crushed, sudden moves blindside the market. A tiny catalyst, maybe a shift in BOJ rhetoric, maybe a US yield spike, can trigger a 500-point flush that stops out late longs before the trend resumes. That is the weak script. We trade it, not fight it. Let's go top down, weekly to hourly. On the weekly chart, price is above every major moving average. The MA20 sits way down at 62,069. The MA50 is 54,925. The MA200 is 41,687. This is as extended as it gets. The weekly MACD is printing 75.95 and still climbing. No bearish divergence yet, so the macro pulse remains bullish. But the RSI at 74.2 is tapping the zone where previous multi-week tops are formed. Stochastic at 92.6 is screaming exhaustion. That doesn't mean sell. It means we need a pullback or consolidation to reset momentum for the next leg. If we don't get it, any further upside will be sloppy and prone to sharp reversals. The weekly resistance levels are clear. R1 at 71,974, R2 at 74,588, R3 at 76,345. Those are the upside milestones. Support sits at the weekly pivot 70,217, then S1 at 67,604, and deeper at 63,233. Notice the massive gap between current price 69,744 and that first real support, over 2,000 points. That void is where stops live. When you see a 2,000 point air pocket, the market will want to test it at some point this week, especially with daily momentum already wobbling. Drop to the daily chart. The daily trend is neutral. That's critical. Last week's candles printed a series of small bodies near the 70,000 area, failing to close above Friday's high with conviction. The daily MA20 is at 62,069, far below, so price is stretched from the mean. ADX at 38 confirms a strong trend, but the daily CCI at 124 is approaching extreme readings that often precede a snapback. The MACD on daily is still positive but flattening. We are seeing the first signs of momentum decay, now down to 4H and 60M where the Monday trade sets up. The 4H trend is neutral. 1H trend is strong buy. That's a recipe for a morning spike that fades. On 60 minutes, the MA5 is 68,437, MA10 65,848, so the short-term structure is solidly bullish. But here's what most traders will miss until Wednesday. The weekly pivot at 70,217 is also the confluence of the 60M MA60 and a prior volume node from mid-June. This zone will act as a magnet. On Monday, any dip towards 70,217 is not a breakdown. It's a liquidity reload. And a failure to reclaim 71,974 on the first test will trap breakout buyers. That's where the week's money is made. The weekend narrative was simple. Japan stocks higher, Nikkei up 1.53%, and the Nikkei volatility index down 26.76% to 24.74, a new 3-month low. That sounds bullish, until you realize ultra-low VIX-style readings often precede violent expansions. The yen weakening further is baked in, but if the dollar-yen stalls near 160 or the BOJ hints at something, the unwind in Nikkei will be swift. The week's event calendar is light for Japan-specific releases, so the Nikkei will take its cues from US equity futures and bond yields. The highest impact session will likely be Thursday's US data or any surprise comments from BOJ officials. The 1 to 2 week directional lean remains up as long as 70,217 holds. We target 74,588 on the stretch side. The invalidation point for the bullish thesis is a daily close below 67,604. That would break the swing low and signal the trend has rolled over. Do you think the Nikkei closes above 71,974 this Friday? Comment yes or no. I'm tracking consensus right now. Drop your call. Most people skip the planning phase. That's exactly where this week's money is made. Keep watching. I'm giving you 2 Monday scalps and the swing trade that can run the next 3 to 5 days. Everything with exact entries, stops, targets, and the on-screen trade cards. Strategy 1. The Monday opening scalp, scalping, high probability. Focus on the first 1 to 3 hours of Monday session. The setup is a retest of Friday's high turn support. Friday's high sits right at 70,000 psychologically, but technically the 5M chart's key level is 69,880, the last consolidation before the close. If price retests 69,880 and holds a 5-minute bid candle above it, we go long. The stop loss is 69,720, just below the Asian session low. Take profit 1 is 70,450, targeting the pre-market liquidity peak. That's a 1 to 1.5 risk-reward scalp. Take profit 2, if you're aggressive, is 70,850, just under the 71,000 figure. The void condition. If a 5-minute candle closes below 69,720, the Monday scalp is dead, and we step aside. That's your line. The Monday opening SCLP entry, 69,880, 5M bullish reclaim of Friday's high area, stop loss, 69,720 take profit 1, 70,450 take profit 2, 70,850, optional, risk in reward, 1:2.2R, to TP2, invalidation. Void if 5M candle closes below 69,720. Strategy 2. The Monday liquidity grab, scalping, counter noise. This one exploits the trapped breakout crowd. We know the weekly pivot at 70,217 is the magnet. Early Monday, if price spikes above Friday's high 70,100 and quickly reverses, a classic stop hunt, we'll see a wick above 70,217 that fails. The entry is a 5-minute close back below 70,100 after that fake out. Stop loss goes just above the wick high, let's say 70,350. The fast target is 69,750, right at the Asian session volume point of control. That's a scalp of roughly 350 points with a 250-point stop. This requires aggressive execution. If the fake out doesn't happen and price simply grinds higher, we do not take this trade. Liquidity grab only. The Monday liquidity GRAB entry, short on 5M close below 70,100 after a spike above 70,217 fail. Stop loss, 70,350, above wick, take profit 1, 69,750 risk, reward, 1:1.4R invalidation. Void if no clear stop hunt above 70,217 in first 2 hours. Are you scalping Monday or swinging the week? Comment scalp or swing. Let's see who's built for this market. Strategy 3, the 3 to 5 day swing, trend alignment. This swing aligns with the weekly bullish structure but respects the overbought risk. We want to buy a mean reversion dip, not chase the melt up. The trigger condition: a 4-hour candle close back above 70,217 after a pullback early in the week, ideally Tuesday or Wednesday following a flush. This confirms the weekly pivot holds as support. The entry is 70,280 on that 4H close. Stop loss goes below the weekly structural level at 69,600, just under Monday's likely swing low. That's a 680-point stop. Conservative target 1 is 71,974, the weekly R1, capturing the core resistance test. Target 2, the stretch target for Friday, is 74,588. If we hit halfway to TP1, around 71,100, we move the stop to break even. The explicit invalidation: a daily close below 67,604 voids the entire weekly bullish thesis and turns us bearish. This swing can run 3 to 5 days, but we manage it actively 3 to 5 days to earn entry. 70,280, for H close back above weekly pivot after dip, stop loss. 69,600 take profit 1, 71,974 take profit 2, 74,588 risk, reward, 1:2.5R, TP1, 1:6.3R, TP2, invalidation, void if daily close below 67,604. Risk management pulse, 30 seconds max, never risk more than 1 to 2% per trade on this index. The ATR is 3,635 points. Massive swings are normal. Holding through high-impact days like Thursday requires tighter sizing. Stops are non-negotiable, especially on the swing. This is how you survive a volatility expansion and catch the next weekly move. The one number burned into your screen this week is 70,217. If the Nikkei holds above it, the melt up towards 76,000 is alive. If we lose it on a daily close, the floor drops to 67,600 and the monthly trend flips. Watch that level like your P&L depends on it. Friday's possible finale: a weekly close above 71,974 sets up a blow-off into next week. A close back below 70,000 and we're talking a deeper correction for the month. I'll have the updated blueprint this Sunday. If you want last week's recap to see exactly how we got to these levels, that video is live now. Tap the end screen. Then hit the bell so Sunday's next week ahead alert lands before the Tokyo Open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that define your week. This week is ruled by 70,217.